Welcome back to TechKidFX for another price prediction update, and in this video I'll be giving you a price prediction update on Polygon Matic, whose current price stands at the $0.8761 mark, and here on TradingView the market is down by 4.49%. and in this video I want to give you the short-term and the long-term scenarios that I'm expecting to play out, basing my analysis on the Elliot structures and the Fibonacci's, and allow me to kickstart the video here on the daily chart by giving you a brief of what has been happening here on the Polygon Matic chart. So Polygon Matic, from these low prices that we had been trading within, we saw a very nice bounce to the upper side, making it to an all-time high in a movement that I'm terming as a higher Elliott wave count 1. And after seeing the all-time high, we had been seeing lower prices in this massive ABC corrective structure, which took us back to around the $0.32 mark in a movement that I'm terming as a higher Elliott wave count 2. And after seeing that movement to the lower side in the formation of that higher Elliott wave count 2, whatever we expect next is a bounce to the upper side in the formation of a higher Elliott wave count 3 before we see a wave 4, and then continue pushing even higher in the formation of that wave 5 to the upper side, and sketching out a minimum target area to the upper side in the formation of this wave 3, using a trend-based Fibonacci, connecting it from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave. That gives me a minimum target area to the upper side at the fib level 1.618. and that perfectly lies at around the $5.07 mark, and that is the minimum that I would expect Polygon Matic to do in the next bull market, and that is my long-term scenario that I'm expecting to play out here on the Polygon Matic chart. And jumping to the 4-hour chart for further analysis, here on the 4-hour chart you can see I have this Elliott wave structure to the upper side in yellow, which is a fractal wave within that high Elliott wave count 3 that I have shown you on the daily chart, where I believe we have completed the formation of a higher Elliott wave count 1 over here, and within a higher Elliott wave count 1, which is an impulsive wave, and that impulsive nature within that first wave to the upper side over here has been represented over here using this Elliott wave structure in yellow, which is a fractal wave within that first wave to the upper side, and using a trend-based Fibonacci, connecting it from the low of the first wave down there to the high of the wave 1, then dragging the fibs to the low of the second wave. That gives me a minimum target area to the upper side at the fib level 0.618, and that is at around the $1.24 mark in the formation of that high Elliott wave count 1, which is a target area that we have fully maximized because we made our high at around the $1.3 mark. Then after seeing the high for that higher Elliott wave count 1, we have been seeing lower prices in these in the formation of a higher Elliott wave count 2, and because the wave 2 is a corrective wave, I also expect to see an ABC corrective structure over here to represent the corrective nature of a second wave, and I believe we are seeing such a structure right here, having this as the wave A, then a wave B, then I'm expecting a new low in the formation of that wave C to fully maximize the formation of this higher Elliott wave count 2, and sketching out a minimum target area to the lower side in the formation of that wave 2 using a trend-based Fibonacci, connecting it from the high of that wave A to the low of the wave A, then dragging the fibs to the high of that wave B. That gives me a minimum target area to the lower side at the fib level 1.618, and that is back to around the $0.32 mark in the formation of this wave 2 to the lower side. So that is the minimum that I'm expecting that wave 2 to the lower side to do, and that means there is room for us to support any movements to the lower side in case we continue losing key areas of supports over here. And from what I have here on the 4-hour chart, you can see we had been trading within this channel over here, and we have managed to see a breakout to the lower side. We have also managed to lose the 20-day MA, and that would mean now it's acting as resistance. We were also facing the key area of resistance at around the $0.95 mark, which we did not manage to break above once we saw this impulsive movement to the upper side. And here on the 4-hour chart today you can see we have printed this bearish candlestick, and that would mean lower prices might be coming our way. And having managed to break out of the channel to the lower side and seeing such a candlestick over here, there are chances that we might continue pushing lower, and my next target area is at around the $0.78 mark, which is our key area of support down here. And in case we lose that key area of support, then there are chances of seeing a retest of that key area of support like that. And once the retest is in, then there are chances of continuing to push even lower, continue losing the key areas of supports that we have in between over here, and fully maximize the formation of that higher Elliott wave count 2 before we see another impulsive movement to the upper side in the formation of a higher Elliott wave count 3. There are also chances that we can get to that key area of support at around the $0.78 mark, find support, and then see a bounce to the upper side and also manage to break above the key area of resistance at around the $0.95 mark. And in case that plays out within the formation of a wave C, here on the 1 hour chart, I had sketched out an Elliott, a 5-wave structure within the formation of that wave C to the lower side. And here on the 1 hour chart, in case we manage to break above the key area of resistance at around the $0.95 mark and make a high, there are chances of making a high for the second wave. Because I have these as my first wave to the lower side, then I expected a bit of a bounce to the upper side in the formation of a second wave, then expect a wave 3, then a wave 4, and then continue pushing even lower in the formation of that wave 5. And in case we manage to break above the $0.95 mark and make a high, then there are chances of making the high for this wave 2. And in case that doesn't happen, then there are chances that we made our high at around the $0.94 mark in this movement right here. And whatever we have started to see after seeing the breakout out of this channel, then that might be the impulsive movement that I'm expecting in the formation of this wave 3 to the lower side. And jumping to the 4 hour chart to also take a look at the indicators to see what movements will be supported. Here on the RSI, we are trading at around the 35 mark, meaning we have a bit of room for us to support any movements to the lower side before we get into the oversold region. Also taking a look at the MACD, here on the MACD, we have printed a bearish cross, and that would mean lower prices are coming our way. So let's be patient and see how that plays out, and I'll keep you updated.